Welcome back, everybody. Here's a word of warning. If you are using Bitcoin or Ether to buy NFTs, those non-fungible tokens, you better be prepared for a big tax surprise. And we don't mean a good surprise. Robert Frank joins us right now. He's got more on this front. Robert, this comes out of a conversation we were having the other morning.
Yeah, absolutely. Credit to you for first raising this question, because as it turns out, collectors who are buying NFTs with their cryptocurrency gains could face large tax bills this year for deals that most probably thought were tax-free. And the reason is an obscure rule around cryptocurrencies and the so-called disposition of assets. Here's how it works. Say you bought $100 worth of Ether back in 2018. That's now worth around $1,800. If you use that $1,800 in Ether to buy an NFT, you would owe capital gains tax on the $1,700 gain in the Ether as part of the purchase. So as soon as you bought the NFT, you would owe capital gains tax of up to $340. Now, the IRS considers crypto a capital asset, not a currency. And if you exchange crypto for any other good or asset, you immediately recognize a capital gain or loss. Experts say most people who are buying NFTs today are using Bitcoin and Ether, and they're not aware of the tax. Most platforms that sell NFTs are not reporting taxes to the IRS because they don't have the full crypto price history for each buyer. Now, the tax does not apply to non-American overseas buyers, which means that the buyer of that $69 million Beeple NFT at Christie's, he is a tax resident of Singapore that doesn't have a capital gains tax. He would not owe any tax. And so that's why a lot of these big overseas buyers are using NFTs as a way to sort of use their gains, transfer them to something else without paying taxes. But again, that's only the overseas folks. The Americans have to pay the IRS. Becky?
I mean, that's the weirdest thing, Robert. The idea that, again, you have to be reminded this is not a currency. This is an asset that's treated differently. So you can't just do that. Would it be the same if you were to use some portion of it that you bought? I don't know. Like, what if you bought a hot dog or a pizza or something? I guess you can't even do that anymore. Bitcoin's gotten so valuable.
Yeah, if you exchange Bitcoin or Ether or any cryptocurrency for any good or services, whether it's NFTs or anything, that counts as a taxable event. And the hard thing is for a lot of these crypto holders, they purchase tranches of their crypto over multiple periods and multiple amounts. So figuring out the basis and the capital gains is really hard. So now that we see these platforms starting that help you track when you bought them, what your portfolio looks like, what the average cost basis is, and what your taxes are. Because it's really complicated. Again, it's not a currency.
I wondered, Robert, why you were just focusing on NFTs. We had Judy Shelton on yesterday, made that point. There are nail salons out in, I think this one happened to be over in Summit, New Jersey. We accept Bitcoin. If you go get your nails done, you have a capital gain. I think it's a tax.
You have a capital gain.
If you use it for any transaction. But it didn't seem like as big a deal when it was, if you bought it down, last year and it had moved from 7,000 or 8,000 to 8,500. It didn't seem like that big a deal. But now, I mean, you're incurring a huge capital gain tax on any time you use it for a transaction. So, she was mentioning that yesterday as one of the reasons why you really got to think long and hard about whether it's a currency or not. What a pain every time you go.
That's right. And in New Jersey, when you have a capital gain, you have to pay ordinary income tax rates on a state basis so you're paying federal capital gains and the state, yes. Any capital gain that's New Jersey, New York, California, you pay the federal capital gains tax and then state tax at an ordinary income level. Yeah. So it's twice the tax.
Shepard Smith here. Thanks for watching CNBC on YouTube.